With this video, we are starting chapter 12, Bank Reconciliation Statement. Now, what do we mean by bank reconciliation statement? Okay, from the word reconcile, it means that to compare two financial statements and to match them. Okay, so bank reconciliation statement is a statement prepared on a particular date to reconcile. Okay, to reconcile the bank balance as per cash book. Okay, we have learned cash book earlier. We have studied single column cash book and two column cash book. So in the two column cash book, bank transactions are recorded in the bank column. So we will use this bank columns information and compare it or reconcile it with the balance as per the bank passbook or the bank statement. Bank record all its transactions with the account holder from the bank's point of view, and it issues a bank statement to the account holder, or it records all the transactions in a passbook and gives it to the account holder. The account holder can use the information in the passbook and compare, reconcile it with the bank column of the cash book. Okay, bank balance. I am repeating. Bank reconciliation statement is a statement prepared on a particular date to reconcile the bank balance as per cash book. Okay, bank columns transactions. Okay, bank balance as per cash book is compared with the is reconciled with the balance as per bank passbook or the bank statement. Okay, now many times you will while comparing you will find that the balance as per cash book is not as the same balance in the passbook. The balance as per passbook and the balance as per cash book are different. So the accountant prepares bank reconciliation statement by identifying the entries due to which the difference is there. Okay, so BRS shows the entries because of which difference between the cash book bank column balance and the passbook balance difference is there. Okay, okay, now look here. This is the extract of the cash book is given, and this is the passbook. I have taken few transactions to understand the reasons behind the difference in the cash book and the passbook balance. Now you see here one transaction. I have not mentioned the dates. To cash 20,000 is there. That means it is a deposit. It is recorded on the debit side. So cash was deposited into the bank. Contra entry is there. Okay. In the passbook, it will be recorded in the deposit column. Okay, and it will show a credit balance. If cash book is showing debit, if it is recorded in the debit column, in the passbook it will be recorded in the deposits column, which is credited. Okay, opposite. Okay, cash book it's debit, and in the passbook the same amount will be recorded in the credit deposits column. Okay, so the net balance is also credit balance, 20,000 rupees. Now let's take another transaction by Rohan. Amount check was paid to Rohan, 2,000 rupees. It is recorded on the credit side of cash book. In the passbook it will be recorded in the debit column. Okay, withdrawals column, to Rohan. Compare this. To cash, here it's by cash, 20,000 rupees. Here it's by Rohan. In the passbook it will be to Rohan in the withdrawal column. Okay, compare these two transactions. These two transactions are recorded in the cash book also and in the passbook also, and because of these two transactions the balance of cash book and passbook will not differ. Now see, one more transaction is there to Mehta, 3,000 rupees. Okay, so that 3,000 is also recorded in passbook. Here 3,000 is recorded on the debit side, and here it is recorded in the credit column. Okay, in the passbook. Again, because of this transaction there will be no difference in the cash book balance and passbook balance. Now check by Reena. Check was issued to Reena, 4,000 rupees. That 4,000 check is not mentioned in the passbook, and because of which the balance of the cash book and passbook will differ. Okay, according to this cash book, check was issued, 4,000 was deducted from the bank balance, but since it is not recorded in the passbook balance will be higher by 4,000 rupees. Okay, because of this transaction. Another transaction, Sharma have deposited check. Okay, we have got a check from Sharma and it was deposited into the bank, 5,000 rupees. So because of this transaction, the cash book balance increased by 5,000, but since it is not recorded in passbook anywhere, the passbook balance will be less, shown less by 5,000 rupees. Okay, this 4,000 is shown in cash book but not in passbook. Similarly, this 5,000 is recorded in cash book and not in passbook, and because of which the cash book and passbook balances will be different. Similarly, there is one more transaction in our passbook, that is to bank charges 500 rupees, that is not recorded in the cash book. So bank charges, it is debited, passbook balance has gone down, but it will not affect the cash book balance. Okay, so these items which are recorded in one book, that is it is recorded in cash book but not in passbook, will be recorded in the bank reconciliation statement. And the last transaction, see, by interest, the bank have collected interest on our behalf, 800 rupees, it is recorded in the credit column, 800. Okay, because of which the bank balance have increased, but since it is not recorded in cash book, it will not increase the cash book's bank column balance. Okay, see, in total there are 4 reasons. 1, check issued to Rina is not recorded in passbook, because of which there will be a difference in both the balances. Similarly, check of Sharma deposited is recorded in cash book but not in passbook, that will also cause a difference in the balances. Similarly, bank charges and interest collected. Okay, so 4 items are there. What is the balance of cash book? 22,000. And what is the closing balance of passbook? It is 21,300. Okay, 22,000 and 21,300, and because of which the cash book and passbook balances are different, and we have identified 4 transactions. There are few more transactions that we will discuss later on. Just few transactions I have mentioned here so that you can understand the topic. Now see, the cash book balance was 22,000. Okay, 22,000, and passbook balance is 21,300 rupees. Now what are the reasons? Check issued to Rina not present at 4,000 was one transaction which was in the cash book but not in the passbook. That will lead to difference in the balances. Then check of Sharma deposited not collected 5,000 rupees. It is recorded in cash book but not in passbook. Then bank charges recorded in passbook not in cash book, rupees 500 rupees. And one more, interest collected by bank not recorded in the passbook, 800 rupees. These are the 4 entries which is resulting in change in or difference in the cash book and passbook balances. Now preparation of bank reconciliation statement starting with cash book balance. We can prepare a BRS starting with passbook balance also and with cash book balance also. In the introduction video we are discussing only one aspect, that is starting with cash book balance. All the other reasons of difference will also be discussed, but just now I have taken only 4 points. Okay, bank reconciliation statement format is like this. There will be 3 columns, particulars plus minus. Okay, so the first item is the balance as per cash book. Cash book balance is given, favorable balance 22,000 rupees. Okay, now see, check issued not presented, it was deducted from the cash book balance, but since it is not recorded in passbook and we have to find out the passbook balance, all the adjustments will be done as per passbook. Okay, in the cash book this 4,000 was deducted, but it is not recorded in passbook, so the effect will be cancelled. Okay, so the 4,000 deducted will be again added to the balance 22,000 rupees. Similarly, check deposited was added to the balance in the cash book, but in the passbook it was not recorded. We have to find the passbook balance. Okay, so to determine that, we will nullify to reverse the effect of 5,000 rupees added, we will deduct 5,000 rupees. In the same manner, bank charges not recorded in cash book. In the passbook it was deducted. Okay, in the cash book the transaction is not recorded. To determine passbook balance, the same effect will be shown in the BRS. 500 will be deducted. In the same manner, one more effect is there. In the passbook 800 rupees was added, the interest collected was added, increased. Okay, in cash book it is not recorded, so we will add that 800 rupees to the cash book balance. Now see, all these 4 transactions are recorded. 22 plus 4 plus 800, it's 26,800. From that, when we deduct 5,500, we get the balance of 21,300. That is balance as per passbook 21,300. Okay, that was the same thing, no? In the cash book and passbook, cash book it is 22,000 and in the passbook it is 21,300. That means everything is all right. If this, after determining all the reasons of difference, if the balances received is not according to the cash book or passbook, then we have to find out the reasons of that. Okay, so this is the BRS. In the next video we will be discussing in detail the more reasons due to which difference is there, and also the methods how to prepare BRS. Okay, similarly BRS can be prepared starting with passbook balance also. The same question. Okay, we can start it with using 21,300 here. Okay, and then these items will be added and deducted, and at the end we will get the cash book balance as 22,000. Okay.